Alright. Oh, who's in here? Hey, what's up, guys? Hello, hello, hello. What's up, what's up, what's up? Oh, I see your guys' likes there. Thank you. Oh, 4 likes before we even began? Alright. You guys are coming in here early. Hey, I see you guys' reactions in the chat. Nice, nice, nice. Yeah, let me know if you guys are in here. Either talking to chat or do the reactions that I'm seeing here now. I don't know how many of you guys are doing it, but thank you. Alright, so we're gonna start the stream a little bit early. I know most people are, hey, do nothing, what's up, man? Thank you for the emojis as always. So we're gonna talk about, well, volatility. Let me bring the music down a little bit. There we go. I think the audio's fine now, right, guys? Okay, perfect. Yeah. So as seen here in the stream, or in the thumbnail, in the description box, right? We're gonna be going over just simple technical analysis on the SPY, and right now that's essentially what we need to depend on, because price action is king when markets are dominated by an equal balance of bears and bulls, right? I can't believe I'm saying this, but this equal balance of bears and bulls have been occurring for 4 months now. It's been over 4 months now, actually, since March began. So that's the only thing that we have to rely on. And unfortunately, if that is not your forte, right, or technical analysis not your cup of tea, the only thing that you have to do if you're that kind of person is just sit out, right, and just sit in cash or be hedged. Or just continue to have your long-term positions that you've been holding for years, and maybe you might want to add on some positions. Maybe you want to cut back on some positions, right? It all depends on your own scenario and your own time horizon that you have set for yourself for each individual position in your portfolio, right? So with that being said, though, this live stream will be catered towards technical analysis and technical analysis only. And again, why? Because it really matters when the overall market trends are dominated by both sellers and buyers, or bears or bulls, looking at the charts, right? Both groups, both sides are fully focused on levels, trends, momentum, and indicators. Okay? And that's essentially what technical analysis is, right? It's more of an art than science, I would say, in my honest opinion. Okay, I know some people might say the entire opposite thing, where they say it's more of a science but than an art. But I know a majority of people agree with me by saying that it's more of an art form than a science, right? So let's first go over. Okay, with that being said, okay, let's first go over SPY. So as I've stated for the last 4 months, right, we have 4 critical levels that we need to be looking out for, right? 694, 686, 675.50, and 670. And look at how great, even just in the last 2 months alone, January and February of this year, we've been following these levels to a T. Okay, I mean, you guys can see it, right? I mean, from 2026 all the way up to now. And we've mostly been respecting the 675.50, 686, and 694 levels. But yesterday, on Monday, we actually came back, on Tuesday, we came back down to retest this pretty heavy level of support at 670. This is a level that goes all the way back to November. So again, even if you move down and made a new lower low, this is still the same level that we've been in since well, November, right? So it's been 4+ months. So even if bears might have celebrated the fact that we made a new lower low at 670, that's nothing, right? We haven't even gone past the low that we made in late November, right? So if you were to come back down and go past this low back in November that we've made, then we should be getting somewhere, right? That means we're heavily going to be in a downtrend on all the higher time frames or HTFs, right? Like daily, weekly, and monthly. But that's not the case. Okay, so right now it's hard to celebrate being a bull or a bear on multiple higher time frames, because you need to be able to quickly pivot and switch back and forth depending on how the markets are moving. Okay, if you're not doing that, and if you're choosing not to do that, then what you need to be doing is by sitting on the sidelines with cash, or you just have to hedge, right? Because again, it's this constant kangaroo market, right? That's the coin that that's the term that was coined back in, I believe, 2022. Okay, so obviously 2022 was a lot different, but there's a lot of similarities to what we're seeing now when we harken back to the performance of 2022. And so, you know, hey, what's up, guys? Hello. Welcome. Come in. So you guys just missed a little bit of an important thing that I've stated when the stream began, but that's all right. You guys can always watch the replay. Hello, guys. Hello. Make sure you guys hit that like button down below. If anyone is new here, and if you guys have been listening since the beginning of the stream, make sure you guys hit that subscribe button as well. We're almost at 650 subscribers, right? We're almost hitting 700 subs. So make sure you guys hit that subscribe button if you guys are liking what I'm saying and what you guys are hearing. So, you know, what you guys have to just focus on right now are these 4 specific levels. And again, these are, you know, foolproof levels, right? These have been established for the last 4+ months at this point in time. And today, right now, let's look at what today's action brought us. So I've actually written this in the CFO Stream Watch Reports market summary of this week. So this was released on Sunday night to all my readers, but I am actually pretty impressed how accurate this has been so far. So I specifically stated that we could be seeing either a low on Monday or Tuesday. Obviously, there's some nuance to that because of the current geopolitical tensions that we've been seeing in the Iran conflict or war. But I said that most likely, if we pivot in either of these 2 days, we can actually be seeing a nice move back up higher and potentially at the previous pivot high points. And that's exactly what we've done today, especially after yesterday's massive pivot with massive volume, right? And again, I have to say massive volume here, even though it's still relatively small, but it was an overall larger volume day, bigger than the average volume on the daily time frame, and it's significantly a larger volume compared to the last 4 months of sideways consolidation that we've had, right? So with that being said, we were able to retest the upper range levels, right? And then what are the 2 upper range levels, guys? I mean, I've said this multiple times, 686 and 694. And today we were able to briefly go over as well, but ultimately, as you guys know, the 686 level is a huge area of contention between buyers and sellers. And also, on top of that, we had this convergence of the daily 10 and the daily 21 SMAs, which are now still slightly curling down, which is a little bit of a concern. However, with the current underlying price action, my SMAs here, so let me actually show you guys exactly what I'm showing you guys here, or exactly what I'm seeing here. Where's the, there we go. Okay, so one thing that I really like about my short-term SMAs on the daily time frame is that the daily 10 SMA is actually, it has been moving sideways since mid-February, and it's been relatively stable above the 686 level. So, you know, that brings me a bit more confidence in the fact that, you know, my analysis from Sunday could work out all the way up into the end of this week, and the fact that we could potentially enter into this upper range area of supply and turn it into a potential area of demand between, again, 686 to 694. Again, albeit a wide range, it's still a very good range to be looking out for this, well, at least by the end of this week, hopefully. Okay, so now here's where I can actually get a bit more bullish as well. So as you see here on the daily 21 SMA, we're seeing this kind of a downward spiral, right? We're going lower, and usually when prices tend to want to go up higher, we start to see. So let me actually draw this out for you guys. So this is what we like to see, right? Or what I like to see if we were to have a nice move up higher, and that's kind of where the current indications of my SMAs are pointing towards. Okay, so my 21 SMA will eventually cross below, right? There's going to be a cross below the daily 10 SMA. Okay, so let me actually have a nice little color scheme going on here. Okay, so, and then my 10 SMA will eventually try to do this, right? So there's going to be kind of this divergence, right? So there's currently right now we're nearly at this convergence point between the daily 10 and daily 21 SMAs. But what I would want to see and what I would like to see as we head into the end of this week, right? And based on all the other factors that I've just discussed regarding the entire action of the daily 10 SMA staying over the 686 level, and then the current slow drip lower of the daily 21 SMAs, I would love the price to move up higher, first of all, right? Break over 686, and eventually be able to break over the daily 10 SMA as the daily 21 SMA curls lower. And why would I want this, right? Because again, if the prices move up higher, then the daily 21 SMA can start to curl back up higher. And guess what? Regarding SMAs, right, or EMAs, when the price is in an uptrend, you want the short-term SMAs or EMAs, whatever you guys use, to be in an order, right? So the shortest SMA or EMA will be very close to the price and falling close to the price in regards to the trend, and then the daily 21 SMA will be falling close behind, right? So it's one of those things where it just has to make logical sense based on what you're looking at, right? So hopefully that makes sense, guys. Okay, so that was a quick little technical lesson there, right? So regarding what I just said there, right? This is just one of my views, all right? Now, obviously, as I stated on Monday as well, we have this massive wedge chart pattern. There's this symmetrical triangle. Again, those are two synonymous names, and both, this chart pattern specifically is a neutral chart pattern where it won't exclusively give you a break to the upside or exclusively give you a break to the downside. It could give either or, right? Depending on how the price decides to, where this price decides to break out of, right? Either below this ascending support trend line or over this descending resistance trend line. And this could most likely be occurring at the near convergence point of these two trend lines that make up the overall wedge or symmetrical triangle chart pattern. Does that make sense? Right? So let me kind of give you guys a visual of what I'm seeing in my own head regarding this. Oops. Let's get rid of this as well. So essentially what we're looking for is basically this, right? Hopefully, right? Where we see either a move to the upside, right? Or a break to the downside. Oops. Right? So something like this, all right? So this is where my two trend lines will be converging around this area. And again, I've also stated this to my members in the CFO Stream Watch report and in the private CFO Discord that this 686 level, again, huge level of significance and contention between buyers and sellers, and we saw that again today. Even though I was glad to see that we retested both of my daily 10 and daily 21 SMAs, however, we still ended up closing below it and below the level of 686, which again, it's not a bad sign. I mean, obviously this is a huge range that we pivoted away from 670 again. I mean, what a great pivot here, right at my level. The low of yesterday was 669.66, right? So that's only 34 cents difference from the 674, the 670 whole number level, right? So again, massive range so far. So tomorrow, I wouldn't be surprised if we tried to have a nice inside day to consolidate this massive move from 670 to 686 today, and obviously we hit a high of 687.09. But again, I really wouldn't mind kind of this follow-through pattern. And again, I don't know how this is going to end up because wedge or symmetrical triangles tend to give us two different possibilities, one to the upside or one to the downside. It all matters as to how this overall chart pattern resolves. Okay, so that is the overall analysis on SPY, right? And again, even if, now here's the thing, even if you were to break up to the upside or to the downside of this wedge, here's a little disclaimer, right? A little asterisk that you guys have to remember. If we don't break out of all of these four levels, especially the lower range and the lower and the upper range levels, so again 686. Well, let me just use specific levels. So if we don't break over 694, or if we don't break under 670, it's still not going to give us enough to set us a trend, right? Or set a trend in the markets, because these four levels have been embroiled in this constant back and forth for the last a little over 4 months now, right, of this sideways consolidation. So let me say that again. even if you were to break to the upside or to the downside out of this macro wedge that we've been making here, or the symmetrical triangle, we need to see a break of this lower level here at 670 for a new downtrend to form, or we need to see a break over the 694 level in order for an uptrend to form. Does that make sense? Let me know if that makes sense, guys. Okay, I see some reactions there. All right. Hopefully, it's truly making sense. Hey, what's up, guys? I see more people coming in. Hello. You guys are about 16 minutes late, but that's okay. You guys can always watch the replay since the replay is automatically uploaded on the channel by default. And guys, I really think we can possibly even hit 1,000 subscribers by the end of this year. There's gonna be 1,000 of you guys on this channel. Pretty good. So hopefully, you know, if you find all of this content on the channel, all these streams really helpful and applicable, especially, make sure you guys share the stream with other people or other traders that you guys know, or just people who might find my information useful, right, on a week-by-week basis or on a daily basis, right, depending on what videos you guys are watching. But yeah, so with all of this being said now, okay, let's go to the last ticker I want to look at, the VIX, right, the volatility index of the S&P 500. So what I really liked about today, about the VIX, is that we actually made a high yesterday, and we had a nice quick smackdown of market vol and this kind of compression that carried out and followed through today. And on the VIX, ideally I would have loved to see it kind of close below 20. However, I'm still not mad about the fact that we're able to see the VIX making a lower low compared to yesterday, and the fact that the value has come back down near this 20 value. Again, this 20 value has been a huge magnet, right? I've said this even before the year began. I said this late last year that the market vol is gonna have this weird affinity to to this 20 value, and you know, it wouldn't matter how we get there, but the VIX will have this magnetic affinity to this 20 value. And that's exactly what we've been getting ever since this year began. And the first kind of expansions of market vol that we saw was in January 20th, right? And since then, we've really just stuck to this 20 value. So again, in order for us to see a directional move, we need to see VIX compressing below 20 and coming back down to around a more favorable condition for market vol, around, I would say, 19 to 18. And even then that still won't give us what we need to see in the overall markets. And again, if vol contracts, we expect to see an overall trend to occur, most likely an uptrend. So even if, for example, if VIX was around 18 to 19, all right, I'm going to expect the S&P 500 to be around 694 to 697-ish, around there, right? Or maybe you know, let me be a little bit more conservative, guys. So maybe around 692 to around 696-ish. Okay, so even then, right? We still haven't seen a higher high just yet. If you were to be around that area, if the VIX was around 18 to 19, okay. And so that's kind of what we need to be looking out for, this kind of compression down to these 18 to 19 value ranges. If you were to see more of a stronger move back to the upside, and at least breaking over the previous pivot high points that we see in SPY, right? And so that will obviously give us more of an opportunity to be a bit more bullish if you wanted to be bullish. But then again, as I said before, regarding all those four major levels on the S&P 500, right, we need to clear the lower or the upper levels, right, and that's the 670 and 694 levels respectively. All right, so now let's kind of do a broader analysis here. So I love the fact that the VIX has, since October of last year, we've been kind of seeing this quick compression of the VIX whenever we hit this 28 value, right? Somewhere around a little over 28. And we saw that yesterday when we got a high on the VIX at 28.15, and we immediately saw vol compressing lower. And this happened 2 different times, last November and last October. Now, if anyone is bearish out there, right? This doesn't mean that we're not going to see any more vol expansions, because in the past, if you try to use the previous times here, right? In early 2025, and I think late 2024. Okay. Oh, oopsies. Didn't mean to do that. Let me actually make sure I get it right. Yeah, around there. Okay, so we saw two instances here in December of 2024 and March, right? March 11th, March 10th, around there. We saw some pretty good retests of this 28 value. And what followed after this was a massive move up higher, right, in market vol. Now, I'm not saying this is going to happen, right? We had this event back in March and April, which is the Liberation Day tariffs, quote unquote, right, from Trump, and that's essentially what caused this massive move in vol. But right now, we kind of had this sticky situation with the overall geopolitical events occurring in Iran, and obviously the potential, or not even potential, we're seeing it now, but the crude oil supply shocks that we've been seeing, especially with Strait of Hormuz, and also Iranian missiles, and just overall specific areas where there is oil mining going on and oil refining going on at the same time, right? So let me see here. So that's where things can become a little bit sticky, right? And I think at some point, okay, now this is my own speculative opinion now. We're most likely going to be seeing some sort of an event later on this year, maybe after quarter two is over, maybe as we're heading towards the summer months, near quarter three, we might be seeing some sort of event that happens to expand vol extremely quick, just like what we saw last year, early last year in March and April. But right now, it just seems like the VIX wants to kind of fixate on this 20 value and just have this magnetic affinity again happening here. But I think we're just going to try to continue to stick to this 20 value. And the fact that dealers are constantly hedging around major expiration dates. For example, the next big one is coming up on March 20th, the monthly expiration of March, which is also the first quarter's OPEX, right? So there's gonna be a lot of volume at hand on that day, and a lot of expiring contracts on that day as well. But yeah, so it's a constant flux of different factors that are at play here that you guys have to consider. But when it comes to just overall technical analysis, right, obviously the fact that the VIX has been in an uptrend this entire year, while the S&P 500 has been moving sideways for the last 4 months, which includes last year, is not a good look, right? And obviously, if you just take a look at this at a face value here, so let me even just get rid of my estimates. Since we made and printed an all-time high price of 697.84. We have been, factually speaking, we have been moving down, right? It's been a slow move lower, and this is what's been frustrating both sides, but especially bears. And the reason why we have this constant equal weight of buyers and sellers just constantly going at each other, right? That bears aren't able to fully break below the defenses that bulls have set up and shown at these specific levels, like 675.50 and 670 like yesterday. So again, this back and forth, this constant kangaroo on price action is going to eventually frustrate one side enough to where they quit, right? And again, this entire wedge chart pattern that's been forming clearly indicates that as well, okay, from a technical perspective. So again, please have these charts, these trend lines right here drawn on your respective SPY daily time frames, and all of my 4 levels that I've drawn here so far. Okay, and obviously you guys can choose to use the levels that I've drawn here as well. All right, these are all 3 levels these are all major levels as well that are below 670 if you guys are bearish. But obviously I really don't have many levels above 694 because again, we're not even there, right? First of all, and also we haven't really made any major moves or strides to make higher highs just yet from a longer term perspective. But I guess you guys can choose 697 as well if this is the major all-time high level. I just don't have it on my chart because it's not significant yet, right? It will become significant if you're able to retest 694, because at that point we'll be breaking over the wedge. And even then, right? Even then. So let me actually give you guys a scenario here. So even if you guys are bullish, right? Right on this descending resistance trend line, if you were to have a nice breakout, okay, and we retest 694, this following scenario can also happen as well, right? We just come right back down, back into this range between 686 and 694, even if you don't like that, right? So this can still continue, right? So we just had to be on the lookout for this type of scenario. And again, I've gone over this last week as well. So if you go look at the overall monthly time frame, right? And the reason why I'm doing that is that we'll have to go all the way back here. So if you go back to the price action of December 2014, all the way up into June 2016. So for over almost a year and a half, the markets went nowhere, right? Just sideways and sideways. What looked like could be a break to the upside ended up moving the price back down, and what looked like a nice potential move lower ended up going back up. That's what the price did for almost a year and a half, right? So this is definitely possible, okay? So you guys have to be very, very vigilant on your technical analysis, and thankfully you guys have me, right? Because I've been doing this, I've been doing technical analysis for 8+ years now, so it's become a very comfortable activity for me to do every single week, every single day. So again, obviously my TA is not going to be 100% correct, but I'm able to at least increase the probability of your guys' trading, and hopefully I'm able to give you guys TA that is applicable to your own trading, whether it be day trading, swing trading, or just overall investing. Okay? Awesome. Okay, I see you guys' reactions there. Awesome. Okay, so yeah, I mean, that's pretty much it for tonight, guys. I just wanted to give you guys kind of that outlook that I have now, and obviously we have other tickers that I want to go over, but tonight I just wanted to really focus on the markets, since everyone is just really kind of I guess no one really has the energy anymore to try to see what the markets could be doing at this point in time, because of the fact that we've just been moving sideways for 4+ months. So, you know, just keep a clear head, right? Focus on the levels that I've given you guys for the past. Well, I've given you guys these levels months ago, and it's still very much prevalent and significant to this day. So yeah, I mean, do what you guys want with this information from tonight's stream and from all the previous streams. And if anyone is new here, make sure you guys check us out on this channel. Watch the previous streams, watch the videos, and most importantly, make sure to hit that subscribe button if you guys are new here. And if you guys really want to join this Charts Focus 1 community that I've grown here, make sure you guys check the description box down below as well. There's the second link down below. It's hard to miss, right? If you guys want to become a reader of the CFO Swing Watch Report, again, I am providing a discount code for your first month if you guys really want to see what we do every single week and what we do every single day here at Charts Focus 1. And again, I really can't recommend it enough, not just because I'm the one that's writing it, but I can't recommend enough that this report will be really helpful for you guys. Even if you don't do anything, even if you don't apply it to your trading, I can guarantee you guys that you guys will learn something in that 1 month alone. So make sure you guys just DM me on Instagram at chartsfocus1. That's my Instagram handle. If you don't know how to spell it, well, just take a look at the channel that you guys are watching this stream on, right? So at chartsfocus1 on Instagram, and you guys can just DM me, say, hey, I'm interested in become a reader, and I'll directly provide you guys with the personalized discount code for a month, and you guys can check us out. All right, so yeah, that is it for tonight, guys. Hopefully, maybe I might just do a stream on Friday night. We'll see. But if I don't, then I'll just see you guys at the regular time again on Monday at 8 p.m. Pacific Standard Time or 11 o'clock Eastern Standard Time. All right, so good luck tomorrow, and I'll see you guys next week. Have a great rest of your night.